You've probably heard of the federal EV tax credit that applies to certain new electric vehicles if they meet the criteria for production and the purchaser meets the criteria based on their tax situation. When the right boxes are checked, you can expect a $7,500 return on your next federal tax filing. But did you know that there's also a credit for used electric cars and plug-in hybrids? Here's how that one works. Firstly, if you want any money back when you file your taxes, the vehicle you buy must come from a dealership or a direct-to-consumer company. Tesla and Rivian are examples of this. They sell used models just like they sell their new ones, online with no middleman. Yes, they have brick-and-mortar stores, but you don't make the transaction with those establishments. That still only happens with the manufacturer directly. Also, the used credit only applies to individuals. No business purchases allowed. Got it? Okay, here are the juicy bits. The price of your used electric car must be under $25,000. Luckily, whether or not the vehicle earned the tax credit when it was new does not apply here. What does apply is its age. It must be 2 years old or older, and this must be the first time the car has earned the used EV credit. If you are, for example, the third owner, but the second owner already took advantage of the used credit, then unfortunately you cannot. So how much is this credit? It's $4,000 or 30% of the used EV's value, whichever number comes out lower. Just like with the 2024 update to the new federal tax credit, this credit can be used as a down payment or a point of sale discount. If you prefer the tax return route, you'll just file for the credit at the end of the tax year. There is a 3-year window within which you can take advantage of this credit. This means if you do so in 2024 and then buy another used EV that qualifies later in 2026, you still must wait until 2027 to apply for the credit on that second car. Like the new EV tax credit, your tax situation matters. You cannot make more than $75,000 a year if you are a single filer, and no more than $112,500 a year if you're the head of a household. If you're filing with your significant other, your income cannot be more than $150,000 combined. You can use your modified AGI from the year you take delivery of the vehicle or the year before, whichever is less. If your income is below the threshold for one of the 2 years, you can still claim the credit. Those caps may sound like they are on the low side, but they give people who can't afford the average new car the ability to try an EV on a budget. To claim the credit, you start out by filling Form 8936 and then file it with your tax return for the year you took possession of the vehicle. Just note, purchases made before calendar year 2023 will not qualify. For more information on tax credits, electric cars, and how much you could save on one, Kelley Blue Book is your go-to source.